Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. We have a good one for you tonight, so get yourself a drink, sit back, and relax because we have a lot to talk about. Now, in today's video, I'm going to be discussing what we saw in the market. And in general, we saw the overall market, the SPY, the QQQs, and the Dow Jones all move up on today, all on the backs of the report that came out today, which was the CPI report. Now, tomorrow, June 14, is going to be an important date because that is when we get the Fed interest rate decision later that afternoon. However, today's market move was on the backs of a positive reading that came out on the inflation rate data, the CPI. And this is primarily how we want to see interest rate move forward in terms of having a positive outlook on the market, because generally what we have seen in the past few months is a downward trend on the CPI report. Now, this is fantastic to see because yet again we see another downtick on the CPI in terms of its consensus and forecast. And this is positive because this is what we want to see. If we start to see CPI deflate, generally the market will move up further because that fear of high inflation is starting to dissipate. So that is good. However, there is a bit of concern to kind of see where we still stand in terms of the current inflation, because if we move to a 5-year trend on inflation, we are ultimately a lot higher. Now, the Fed's goal is to ultimately bring inflation down because back here, this was roughly around 2021, we saw a tremendous spike in inflation on the CPI, the core inflation rate. And the goal is to bring this back down to the Fed's goal of 2%. Now, what we will see on the Fed interest rate decision is going to be key. More importantly is going to be the commentary that comes from the Fed. So the goal here again is not to predict, but it is to react on the Fed's comments. But there is a lot that the chart is already telling us. Currently, we see a trend higher, and we want to look at the indicators. Currently, we have the MACD indicator, and this is more of a trend following indicator, and this is going to tell us where the market's trend is currently taking place. And obviously we have a move higher. The both EMA lines are moving in the upward direction. We don't see any crossovers, and crossovers typically tell us when the trend is starting to revert or move downwards. However, this is what we are currently seeing in terms of the reading for the S&P 500. Now we have, looking at the QQQs, yet again another update. However, the MACD is currently trending higher, but on this end here we have an overbought reading on the RSI. And if we look back at these levels here, so let's pull out the line tool. If we take a look back at where this sits, back here on August of 2020, we reached a reading on the RSI, which is a 77 reading. And soon after, the market made a pullback, tested the 15 EMA, and continued to trend higher. We sort of got that reading here back here in September of 2021, hit that point here at the top here, and then pulled back into the EMA and eventually moved higher. Now, are we getting that same reaction here currently at this moment in time? Well, we are approaching this level, and we actually hit this level back here, 75 reading on the RSI. We currently have a positive reading on the MACD indicator. Now, the key here is to watch price action. Now, are we running into a resistance level on the QQQs? If we pull over the price tool, so that way we could identify where different levels are, which would help us identify a turning point, we are very close. So back here in this is March of 20 or April of 2021, we reached the price level of 371. Then soon after, the week following, the market pulled back. So this is definitely going to be a watch level. We see this hit again on January of 2022. We reached the 370-ish level and the market pulled back. Now, are we going to get that same reaction? I believe we can. And however, the key here though is the differences in sentiment. Now, we have positive reading. We are expecting that the Fed is going to take a pause in their interest rates. We have positive trend, so we can expect a pullback. However, I feel like the pullback isn't going to be as steep compared to back here in 2022. So we can expect a pullback. However, I feel like if we do get a pullback, it can be quickly bought. Now, a level that is very interesting to watch here is going to be the 350 level here. It could pull back into this level, then we can get a resumption. If we zoom in a little closer here, let's see. If we zoom in a little closer to the daily chart, we can pull back into the daily EMA, the 15 EMA, which aligns perfectly on 350. We can get a resumption forward, so we can expect the market to pull back, then test this level here, then move higher. That is what I expect to see happen in the next few days. Considering the fact that we are getting a lot of overbought readings on the RSI, on the daily chart as well. So that is how I am currently seeing the outlook in terms of where price may go. But again, the key again is not to predict, but it is to react to how the price moves. So if price moves down, that is where I will put in a buy and expect the market to kind of consolidate around the 350 level and again move higher. Now, looking at the Dow Jones. Dow Jones is very interesting. So let's look at the weekly 3-year chart. Now this is pretty interesting and it's also very messy. So let me clear this chart for you all. And again, it's always good to work on a clear chart. So this is how we want to look at things. So this is the weekly chart of the Dow Jones. It's a little hard to read just because there's so many different levels that the price likes to interact with. But the idea whenever you're putting in price levels, you want to pick the far extremes of things. So we have this level here, this level here. Now if the market pulls back, this level here, the 333 level, is looking pretty interesting. Now, if we zoom in here, you can see different levels where the Dow Jones will react to. The far extremes, the 347 level is something to watch out for because in the direction that the market is currently heading, since you have the backing of the SPY and the QQQs, which are continuously moving higher on high momentum, we expect that the Dow Jones can move higher to this 347 level, test this level, and again, considering how high SPY and QQQ is with its currently overbought readings, we expect that if the Dow Jones will follow through, we expect that the Dow Jones will pull back after this level is tested, find a level of support, and then again resume higher. Now, what I want to bring our attention to is the VIX. The VIX was very interesting today because if we move to the daily chart, in the previous video we saw that the VIX was finding a lot of premium, a lot of volatility to be anticipated because it literally gapped up an 8% on the VIX. Now that is a big move. This to me, what it tells me is that the VIX has found a floor. Now, whenever the VIX finds a floor, it will stay around this level here for a few days, few weeks, and eventually it'll pick its side. If the VIX wants to move higher, we expect that the market will move down because there's a lot of volatility and uncertainty. And if that were to happen, we have to consider different levels on the major indices of where it could find buyers to eventually cool down its volatility. But right now, we currently see that the VIX is still trending down. Um, it's going to continue to move down until different news events come out. And we do want to see how the Fed's commentary is going to come out, and depending on what they say, will tell us how volatility will be priced into the market. So, but however, today on a move up on the markets, we saw that the VIX did sell off today, moving down 2.6%. Now, this is significant because this just means that it's acting in synchrony of how it should act, compared to all the other major indices. Yesterday was an exceptional day where you saw the indices move up along with the VIX, and that's where you don't what you don't want to see, because if the two moves up, then it could tell you that it is reaching to a point where it wants to reverse. Now, we don't know where this is going to go. However, we want to see this continue to play out, and the key is to continue to monitor, because in the past, what we've seen is whenever things got really volatile, what we saw was whenever it starts to make a positive trend higher, you may see the major indices stall, and eventually the VIX will just explode higher. And that is where volatility will really kick in, and price levels will be very uh, out of sync. And that is where you have to be very picky when you're starting to pick trades. So that is what I have for today. The key now here is to wait and hear out what the Fed has to say, and to really just let the market absorb the data and the commentary to really pick a direction on where it wants to go. So if you enjoyed this video, make sure you hit the like button and the subscribe button so that way you can get our future videos whenever they are released. Thank you again, and we'll see you on the next one.